Hello students. So in today's lecture now we'll be taking up with question number 9. Very first of all, if you have seen the last lecture, well and good. If you have not seen, then before you watch this lecture, first you go to the previous lecture and watch lecture number 10 and watch question number 8, because this question is very much similar to question number 8. Okay, after that only you watch this video lecture 11 of question number 9. So it is a similar question to question number 8. It will be a repractice of similar kind of concepts with only one new point in between. Further, since the videos of this chapter amalgamation are very lengthy, the questions are very lengthy. As I suggested you in the previous lecture also, you can watch this lecture in 2 parts or even in 3 parts. You watch the understanding of the question, make the workings, pause the video, take a break, okay, have some tea, and then come back after around 15-20 minutes or half an hour, watch the second part of the lecture. One part of accounting, you understand it and do it. Again, pause the video, have a break, do something else for 15-20 minutes, come back and then watch the third part of the lecture, just so that your mind is fresh and complete question you are able to understand properly. Okay, and if you are genius, you have the capacity, then you can watch the entire lecture at one go also. That was just a piece of advice. Okay, be attentive. Following are the assets and liabilities of A Limited as on 31st March 2019. Now this balance sheet format you will see is given reverse. First assets are given, then liabilities are given, but actually it is not a balance sheet. Even if you see the heading, it is not mentioned following is the balance sheet of A Limited. What they have mentioned in the question, following are the assets and liabilities. That's it. Information about assets and liabilities is given to you, so that can be given in any order. Okay, proper balance sheet is not actually given to you. So in assets we have land and building, machinery, investments, stock and trade, debtors, cash and bank balance. Liabilities we have equity share capital, as we have been doing every question. You can see here 4 lakhs divided by 10. So what would be the number of equity shares? 4 lakhs divided by 10 would be equal to 40,000. Okay, there are 40,000 equity shares. General reserve, P&L account comes in reserves and surplus. 10% debentures 2,50,000 and creditors 1,28,700. Now, A Limited was absorbed by B Limited. So this is also a question on absorption. Okay, in last question already I went back to the previous slides and explained you what was absorption. One existing company goes into liquidation and is taken over by another existing company. Here A Limited was absorbed by B Limited, means A Limited is going into liquidation. So A Limited is a transferor company and B Limited is purchasing it. So B Limited is transferee company. Okay. A Limited goes into liquidation. So that's a transferor company. B Limited is the purchasing company. So that is transferee company. On above mentioned date on the following condition. Assume means take over. Okay, assume means take over. Assume that all assets and liabilities, so take over all assets and liabilities except investment. Circle that. So investment asset is not taken over. Except investment means investment asset is not taken over, which were sold by A Limited itself, transferor company itself, for rupees 45,000. So in this question we will, for the first time in this question, for the first time in this chapter, we will have that entry of sale of assets also in the books of transferor company. Okay. Discharge, underline discharge, the debentures of A Limited, underline at a discount of 5%. See, I told you in the last question, wherever discharge is given, you will get the agreed value from that. Wherever the language of discharge is given, you will get agreed value from that. By the issue of 12% debentures of 100 each in B Limited, means they are 100 each, means they are issued at par. Is it mentioned they are issued at discount or premium? No. That means they are issued at par. Issue 2 equity shares of rupees 5 each. So underline issue 2 equity shares of 5 each means 5 is the face value in B Limited at rupees 6 per share. So 6 is the agreed value. 5 rupees shares at rupees 6 means premium is rupees 1. Okay, 5 rupees face value shares issued at rupees 6 means premium is rupees 1. In the new company, they are given 5 rupees shares. In the old company, they have 10 rupees shares. That's why maybe they are giving 2 equity shares double because the face value is 5. That common sense or logic may be applied. So issue 2 equity shares of 5 each in B Limited at rupees 6 per share means at premium of 1, and also to pay rupees 2 per share in cash to the shareholders of A Limited, underline in exchange of every share in A Limited. Every share means 1 share. Okay, very much similar language to previous question. So it is a repractice of similar kind of question. If you have watched the previous lecture and understood question 8 properly, much difficulty will not arise in understanding question 9. Pay the cost. Pay the cost means who is going to pay the cost? B Limited. Okay, B Limited. Pay the cost of absorption rupees 2500. It is mentioned by B Limited, transferee company. Okay, B Limited is going to pay the cost of absorption 2500. So that entry will come in the books of B Limited. Liquidation expenses paid by transferee company. Now this is a new adjustment. Mark it important. And that's the reason I'm doing this question. If this adjustment was not there, you would have tried the entire question on your own. Okay. A Limited sold 1/4 shares of received from B Limited at the average rate of rupees 5.5 per share. So this extra journal entry will come in the books of A Limited. Okay, this extra journal entry will come apart from those 14 entries what we have seen in the books of transferor company. Okay, why this extra journal entry will come? Whatever equity shares from this adjustment 4 A company is receiving, entire up till now what we used to do at the end, we used to give that to equity shareholders. But here all equity shares will not go to equity shareholders. 1/4 of the shares are sold by A Limited at 5.5 per share, and that money received cash will go to the equity shareholders. So this extra journal entry will come in the books of A Limited. Now see, accounting exactly same is asked. Prepare necessary ledger accounts in the books of A Limited means transferor company, and opening entries in the books of B Limited means transferee company. Okay. Now going back to the same thing, 3 things we have to decide in the beginning of every question. Yes, come on, work out on your own. Pause the video and work out on your own. Then play the video and verify whether you got those 3 things correct or not. Okay, now every video don't copy and paste the same things. Apply your own logic also. Otherwise in exams you will not be able to do it. Okay. So pause the video, work out on your own, play the video, verify you got it correct or not. First thing we have to identify, is it merger or purchase? Second thing, we have to identify the method of purchase consideration. Third thing, we have to identify if it is merger, pooling of interest method. If it is purchase, purchase method of accounting. So let's go one by one. Come on. Merger. Which are the 3 conditions? All assets and liabilities must be taken over. This condition itself is not satisfied. Try to guess on your own 6 adjustments we have read. Which asset or liability is not taken over? Come on, try to guess on your own. Come on, come on. Investments. Okay, here we have marked except investments. Investments are not taken over. All assets and liabilities are not taken over. So it is not a merger but purchase. First condition itself is not satisfied. Let's go to the second condition. We have concluded it is purchase, but just to verify. Okay. Second condition, at book value. Yes, all other assets are taken at book value, but debenture liability is not taken at book value. its agreed value is discount of 5%, means what did I tell you? In the previous question we had premium. I told you premium means we are paying more. Discount means we are paying less. So agreed value of debentures is going to be 5% less than the book value. So even second condition of merger is not satisfied. Debenture liability is not taken at book value. It is taken at 5% discount, means less value. Okay. Third condition, entire purchase consideration should be settled in the form of equity shares except fractional amount may be paid in cash. But here again adjustment 4, we are paying 2 per cash in cash to the shareholder. So even third condition of merger is not satisfied. We are giving not only equity shares but also 2 per share in cash. None of the three conditions of merger are satisfied. It is purely purchase. Okay, I hope everyone got it. Next, method of purchase consideration. As per adjustment 4, we can conclude that it is net payment method of purchase consideration. Okay, because two modes of payment are given, equity shares, cash, and none of the details are missing. All the details are available. So it is which method of purchase consideration? Net payment method of purchase consideration, right? And because it is purchase, which entry we will be doing or which accounting we will be following in the books of transferee company? Purchase method of accounting we will be following in the books of transferee company. So these 3 points we have concluded. Now before we proceed further, all of you make the format of this ledger accounts. Pause the video and make the format. Once you complete the format, play the video, make the workings. Then as I advise you, after the workings, you can relax, have a break and come to the accounting. Okay. Realization account, ideally all of you make around half a page. Last question we have seen, so big format is not required, 1 page or half page. Equity shareholders account, make around 8 to 10 lines. A limited company account, okay, sorry, B limited company. Now in this question, which is the transferee company? B limited. So make the format of B limited account, around 4 lines. Equity shares of B limited account, around 4 lines, 4 to 5 lines. Cash and bank account, again we will have to make. What reason? As we discussed in the previous question, same reason. Here investments we are selling for 45,000. So how will we do the accounting for receiving that money? Cash rupees 2 per share is received from the transferee company B limited. So how will we do the accounting for that? 1/4 of shares are sold at 5.5 per share. How will we do the accounting for that? Because so many transactions of cash are there, you have to make cash and bank account also. So make these formats, pause the video, then we proceed with the workings. Okay. Okay, I hope everyone has made the format. Now look at the workings. Okay, workings we will make now. First working we had made for debentures in the last question. Same way in this question also we will make the workings for debentures. Okay, which are the debentures in old company? Come on, you all can see here 10% debentures, 2,50,000. So all of you write down on your own. Okay, one more suggestion. Don't play the video and make the workings on your own. Refer to the previous question. Workings are exactly similar. I repeat, exactly similar. Pause the video, try the workings on your own, then play the video and check it whether you got it correct or not. Otherwise in exams you'll never be able to do it. I repeat, pause the video, see the previous questions workings, how they were done. Try the workings on your own, then you play the video and verify you've done it correct or not. Okay? Mind well, follow my instructions properly. Okay, so here we have 10% debentures of 2,50,000. Okay, 10% debentures of 2,50,000. Now they are discharged. I told you discharged means we are giving them more or less. They are discharged at a discount of 5%. So discharge means here we have to add or minus. Okay, discharge means here we have to add or minus. We had done this in previous question also. Discharged at 5% discount means we will minus 5% discount. 2,50,000, 5%, 12,500. If you subtract that, 2,37,500 is the agreed value of debentures. Okay, that is the agreed value of debentures. If you have paused the video and tried on your own, very good. And if you got it correct, fantastic. Okay, you are able to understand the chapter then. If not, pause, rewind and understand it again. Now, how the debentures are issued? Okay, issue of 12% debentures of 100 each in B Limited. Nothing is given means they are issued at par. So how many number of 12% debentures issued will be issued? Number of 12% debentures, okay, in B Limited to be issued at par. To be issued at par is equal to 2,37,500. We assume the face value of debenture is normally 100 rupees. So how many debentures will be issued for this? 2,375. Okay, I hope everyone is able to get this working correct if you have tried on your own. Okay. Now second workings we always make for purchase consideration. Okay. Purchase consideration. Which method we have to follow in purchase consideration? Net payment method. Okay, net payment method. Now, net payment method means modes of payment must be given to you. So, which are the two modes of payment given to you? Okay, modes of payment. So which are the two modes of payment given? First mode of payment is equity shares. As I said, you must have paused the video and tried on your own. So if not still, then again try on your own first, then you refer here whether you got it correct or not. Equity shares, look at adjustment number 4. Issue 2 equity shares. Okay, read this. Issue 2 equity shares, and directly last sentence. In exchange of every share means 1 share of A Limited. So we'll take the second part first. For 1 share of A Limited, we are going to issue how many shares in B Limited? 2 shares in B Limited. For 1 share of A Limited, okay, in exchange of 1 share of A Limited, you are issuing 2 shares of B Limited. Now see in the balance sheet, how many shares of A Limited are there? A Limited's balance sheet 40,000. So for 1 share, 2 shares are issued. So for 40,000 shares, how many shares will be issued in B Limited? 40,000 into 2 divided by 1. 80,000 shares are going to be issued. Now what is the value? Face value is 5 rupees, but agreed value is 6. There is a premium of 1. So we will be taking at 6 rupees. You will say, what is the value of these 80,000 shares? 80,000 equity shares of rupees 5 each at rupees 6. Okay, so 80,000 into 6, what is the value? 4,80,000. This is the value of equity shares that will be given to A Limited. Now what is the second mode of payment? Cash. Okay, what is the second mode of payment? Cash. How much cash is given? Let us verify that. Look at the workings. 4. Pay rupees 2 per share in cash. Over. 40,000 shares are there. So if you pay 2 rupees per share in cash, 40,000 equity shares into rupees 2 per share in cash. So how much cash will be paid? 80,000. 4 lakh 80,000 plus 80,000, 5 lakh 60,000 is the purchase consideration for B Limited. I hope everyone is able to get on your own rather than copying. If not, don't worry. Understand both the lectures 10 and 11 again. There is one more similar question in homework. This we are doing which question? Question 9. See your timetable. Question 10 is your homework that I am not going to do here. It is again exactly similar. So again try and 10 question on your own. 8th question, 9th question, 10th question. You will definitely be clear with the things. Okay. So now all of you can pause the video, take a break advisably of 15-20 minutes and then continue the video and watch the accounting in the books of which company first? A Limited. And if you are not exhausted, you are very good. Continue the video instead of pausing. Continue the video and do the accounting in the books of A Limited. Okay. So all of you should have done the formats of journal entries and ledger accounts in the books of A Limited. Let's take up with the entries now. As we did in the previous question, journal entries we will discuss orally and we will be directly doing the ledger and posting. Okay. So first entry in the books of transferor company is realization account debit to assets account. One more thing, when we pass first 6 entries, you have to take at book values, means you will take only BV means book value, balance sheet values. All the values will be taken from balance sheet only. So first entry, realization account debit to assets account. So realization account on debit side to assets account. All the assets from the balance sheet will be closed. So in that, all of you can see the first asset is land and building with 1,70,000. After that, machinery with 4 lakhs. After that, investments with 50,600. After that, stock in trade with 80,700. After that, debtors with 1,40,500. After that, cash and bank with 16,500. Now all assets are taken into consideration. We discussed that all the assets will be closed and transferred to realization account whether taken over or not. All of you can refer to this entries we had done in the books of transferor company. See this, all assets whether taken over or not. Okay, this we had written in the summary. So same way in this question, all assets will be transferred whether taken over or not. Though investment is not taken over, still we will be transferring it to realization account. Okay. Now let me see how many of you remember the things. First 6 entries, what did we discuss? How many effects? Single effects only, because the other effect is account gets closed. So do we have any other effect for any of these entries in assets? Yes or no? No. Do we have the effect? Yes. You all must remember this. Cash and bank, because in this question we are making cash and bank account. First you write down its opening balance to balance brought down 50,600, and then realization to cash and bank. To cash and bank means in cash and bank account on credit side by realization account 50,600. All of you must remember this. We had done in the last question also. In last question we had workman compensation fund also, liability, but in this question we don't have, which we had transferred to realization. Okay. Sorry, cash and bank is 16,500. I'm sorry, make it 16,500. Not 50,600, 16,500. Okay. Yes, further this total of assets is to be done, that we directly can take from the balance sheet. 8,58,300 would be the total of all the assets. Okay. Now second entry, closing of liabilities. Liabilities account debit to realization. To realization means realization on credit side by liabilities account. Now from the liabilities side we will take all the liabilities over here. So see, on the liabilities side, which all liabilities do we have? 10% debentures, 2,50,000, creditors 1,28,700. However, remember here only those liabilities are transferred to realization account which are taken over. Here debentures and creditors both are taken over because it can assume all assets and liabilities except investments. So both debentures and creditors will be transferred. If you remember in the last question, workers' compensation was paid by transferor company itself. It was not taken over, so we did not transfer to realization account. Here both the liabilities are taken over, so debentures and creditors 2,50,000 and 1,28,700. Okay, 10% debentures 2,50,000 and creditors 1,28,700. Total 3,78,700. Okay. Liabilities only those are transferred which are taken over. Here both the liabilities are taken over. No opposite effect because the other effect is both these accounts get closed. First 6 entries generally have one effect only. Next, after liabilities, equity share capital. So equity share capital account debit 4 lakhs to equity shareholders account. To equity shareholders means equity shareholders on credit side, opposite account by equity share capital account 4 lakhs. Next, reserves and surplus account debit to equity shareholders. Preference shares we don't have, okay? Otherwise the entry is preference share capital to preference shareholders, but we don't have preference share capital. So reserves and surplus account debit means general reserve account debit 50,000, profit and loss account debit 29,600 to equity shareholders account. To equity shareholders account, so equity shareholders account on credit side by general reserve account. What amount? 50,000. And by profit and loss account 29,600. Wherever you have any confusion, you can pause the video, rewind it and listen to that once again. Okay. Reserves and surplus to equity shareholders. To equity shareholders, so equity shareholders on credit side. Opposite accounts by general reserve account and by profit and loss account. Then after that, fictitious assets we don't have means any item of other non-current assets like discount on debentures, underwriting commission we don't have. Okay, so no entry for the sixth one. First six closing entries are done. Now what are seventh and eighth entries? Recollect which ones are those? Yes, purchase consideration. First, purchase consideration due. As we have done in the workings, you all can see purchase consideration is 5,60,000. So transferee company means B limited account debit to realization account. To realization account means realization account on credit side by B limited account in bracket purchase consideration working note 2 5,60,000 and B limited account debit. So in B limited account on debit side to realization account with the purchase consideration of 5,60,000. Okay, I repeat, B limited account debit to realization account. To realization means realization on credit side by B limited. B limited account debit, so B limited account on debit side to realization account. Next, purchase consideration received. Now look at the working note 2. How is this purchase consideration received? Equity shares we have received of 4,80,000. Cash we have received of 80,000. So equity shares comes in, debit what comes in? Equity shares of B limited account debit 4,80,000. Cash comes in, debit what comes in? Cash and bank account debit 80,000. B limited is the giver, credit the giver to B limited account 5,60,000. To B limited account, so B limited on credit side. How is this 5,60,000 received? By equity shares of B limited account 4,80,000 and by cash and bank account 80,000. Now equity shares of B limited account debit. So in equity shares of B limited account on debit side, opposite account to B limited account 4,80,000 and again cash and bank account debit. So cash and bank account debit side to B limited account 80,000. Okay, I repeat it, and still if you are not clear you can pause, rewind and listen again. Cash and bank account debit, equity shares of B limited account debit to B limited account to B limited, so B limited on credit side by equity shares of B limited and by cash and bank. Equity shares of B limited debit, so equity shares of B limited debit side to B limited account. Cash and bank debit, so cash and bank debit side to B limited account 80,000. So 2 entries of purchase consideration are done. Now which is the next entry? Sale of assets not taken over. Here investments are not taken over. So sale of investments, they are sold for 40,000. So cash comes in, debit what comes in? Cash and bank account debit. And will we say to investments? Will we say investment goes out, credit what goes out to investment account? No. We studied it earlier that investments are already closed and transferred to realization account. So now we have to pass the entry cash and bank account debit to realization account. Check it up here. Take out your summary if required. See 9th entry for sale of assets not taken over, cash or bank to realization. Okay. No entry for profit or loss because it automatically gets recorded. So 50,600 investment sold for 45,000. No entry for loss of 5,600. It automatically gets recorded. How? I'll explain you. Cash and bank account debit. So cash and bank on debit side to realization account 45,000. Okay, directly cash comes in, debit what comes in? Cash and bank account debit 45,000. Investment goes out, credit what goes out. But since investments are already closed, instead of to investments we credit to realization account. To realization, so realization on credit side by cash and bank account 45,000. For understanding, you can mention in bracket, this is the value of sale of investments. Now why we don't record its loss of 5,600? Understand it. You debit 50,600 for investments in realization account. You credit 45,000 for investments in realization account. What is the net amount still remaining in realization account? 5,600 of still debit balance is remaining in realization. That represents your loss. So we don't have to record any profit or loss separately because it is automatically getting recorded. I'll explain it again. In realization, investments you have debited with 50,600, credited with 45,000. So 5,600 balance still remains on the debit side. That automatically represents your loss. So when assets are sold which are not taken over, simply cash and bank to realization with the amount received 45,000 and no entry for profit or loss. So here no entry for loss of 5,600. I hope everyone is clear with it. Now next 4 entries are for payment. Which 4 entries for payment? Payment of expense, payment of liability not taken over, payment to preference shareholders. 3 entries for payments. Okay, not 4, sorry. 3 entries for payment. Do we have payment of expense? No. Who is paying this cost of absorption? B Limited, transferee company. So expenses entry will not come in the books of transferor company. Right now we are passing the entries of transferor company. It will come in the books of B Limited. Okay. No entry for expenses. Now payment of liabilities not taken over. Here there are only 2 liabilities, debentures and creditors, and both are taken over. So no entry for payment of liabilities. Next, payment to preference shareholders. There are no preference share here. So no question of payment to preference shareholders. Now, what are the last 2 steps? Realization will be transferred to equity shareholders, and equity shareholders, whatever other accounts balance remains will be transferred to equity shareholders, right? No! It's not that way. I told you here, adjustment 6, there is one extra journal entry to be passed. For what? For sale of shares. Let us pass this journal entry in the workings so that whenever you revise this, this is an extra entry, so better write it in the workings. Sale of shares. So that whenever you revise its posting, you are able to understand. Okay? And this is there in question 10 also, mind well, which you are going to try on your own. Sale of shares in the books of, okay, this working is relevant in the books of A Limited, transferor company. They are only selling these shares. Now, what will be the entry? See, shares are received for 6 rupees. 80,000 shares are received for 4,80,000. But that 6 rupees shares we are selling for 5.5 rupees. So can I say, I repeat, can I say that there is a loss of 50 paise? Okay, I repeat. You are receiving the shares for 6 rupees, selling for 5.5. So there is a loss of 50 paise. 1/4 of shares are sold. How many shares are received? How many shares are received? 80,000 equity shares are received from transferee company as we calculated. How many shares are sold? 1/4 shares are sold. So how many shares are sold? 80,000 shares received multiplied by 1/4. How many shares are sold? 20,000 shares are sold. Now, cash comes in, debit what comes in? Cash and bank account debit. But we have loss, 50 paise loss. So debit all expenses and losses. Realization account debit for the amount of loss. And equity shares of A Limited, these equity shares which we received, okay, these equity shares of B Limited, sorry, equity shares of B Limited goes out, credit what goes out, we are selling them. So, to equity shares of B Limited account, okay. Now amounts, how much cash comes in? 20,000 shares sold for 5.5 rupees. So how much cash comes in? 20,000 into 5.5. Okay, 20,000 into 5.5. 1,10,000 of cash comes in. Now 50 paise is our loss. So realization account debit with the loss of 20,000 into 0.5, 50 paise, 10,000, and equity shares of 6 rupees goes out. So 20,000 into 6, 1,20,000. Okay, why did I make you write this entry? Because it is a new entry apart from those 14 entries what we had studied. Now cash and bank account debit. So in cash and bank account on debit side, to equity shares of B Limited account. What amount did we receive? 1,10,000. Okay. I repeat, cash and bank account debit. So cash and bank account on debit side to equity shares of B Limited account with what amount? 1,10,000. Further, realization account we have to debit with the loss of 10,000. So realization account on debit side. Okay. Realization account on debit side to equity shares of B Limited account to equity shares of B Limited account with the loss in bracket loss of 10,000 and two equity shares of B Limited. So equity shares of B Limited credit side both the opposite accounts by cash and bank account, by cash and bank account 1,10,000, by realization account with the loss of 10,000. Okay, so all of you can refer to this entry again. Cash and bank account debit, cash and bank debit side, two equity shares of B Limited opposite account 1,10,000. Realization account debit, realization account debit side, opposite account to equity shares of B Limited 10,000. And then two equity shares of B Limited. So equity shares of B Limited credit side, both the opposite accounts by cash and bank account and by realization account. Right? Next. After that, we have the entry of after sale of shares extra entry. Now we will pass those two closing entries. Realization will be transferred to equity shareholders. All the other accounts pending will be transferred to equity shareholders. Let us do that. Realization, which side looks more now? 858.68 and credit is more. So first do credit side total 3,78,700 plus 5,60,000 plus 45,000. That comes to 9,83,700. Okay. Credit side total 9,83,700. Write it on both the sides. 9,83,700 minus, subtract the debit side amounts, minus 8,58,300 minus 10,000, so 1,15,400. That is the amount of profit. Credit side is more. to equity shareholders account, in bracket balancing figure as well as profit. Okay, whatever balance remains in realization account will be transferred to equity shareholders account. So balancing figure as well as profit. Two equity shareholders. So equity shareholders on credit side by realization account. Okay, by realization account, profit of 115400. Now, if at all journal entry is to be passed, what did I tell you? Realization, it's on debit side, so realization account debit, and two equity shareholders account, it is on credit side, so realization account debit, two equity shareholders account 1,15,400 if at all the journal entry is asked. Now, whatever accounts remain, balancing figure of all other accounts will be transferred to equity shareholders account. No amount remains in B Limited. It is a squared up account. It gets closed. So both the sides total 5,60,000. Equity shares of B Limited, whatever balance remains, will give those equity shares to shareholders. So 4,80,000. Okay, both the sides 4,80,000 minus 1,20,000 means 3,60,000. Okay, basically 1/4 shares were sold. So remaining 3/4 shares of 4,80,000, 3,60,000 will be given to equity shareholders. So by equity shareholders account, in bracket balancing figure, opposite side in equity shareholders account, two equity shares of B Limited account 3,60,000. Okay, opposite side, debit side in equity shareholders account. Then after that, cash and bank also now. Whatever balancing figure remains will be transferred to equity shareholders account. See, this is the reason we are making cash and bank account, to find out the amount to be paid to equity shareholders. So debit side total 16,500 plus 80,000 plus 45,000 plus 1,10,000. 2,51,500. Both the sides 2,51,500 minus 16,500, so 2,35,000 by equity shareholders account. In bracket balancing figure. Okay, so balance cash remaining 2,35,000 will be paid to equity shareholders. Opposite side, so equity shareholders on debit side, to cash and bank account 2,35,000. Now again, if at all journal entry was asked, then equity shareholders account debit. So equity shareholders account on debit side means equity shareholders account debit. Equity shares and cash and bank account, we have done the entry on credit side. So two equity shares of B Limited account and two cash and bank account. The journal entry would have been equity shareholders account debit, two equity shares of B Limited 3,60,000, two cash and bank 2,35,000. Now lastly, equity shareholders must get tallied. Means lastly, the last account equity shareholders also must get closed. So 3,60,000 plus 2,35,000, 5,95,000. Now check it on credit side, is it same? 4 lakh, 5 lakh, 550, 570, 580, 589, 594 and 5,95,000. Means our entries are correct. So did you all understand the entries in the books of transferor company? Now again, as I said, if you are exhausted, you can pause the video, take a break and after 15 to 20 minutes you can watch the next part, that is opening entries in the books of B Limited. Okay, and if you are not exhausted, then continue watching the video and pass the entries in the books of B Limited. Meanwhile, pause the video and make the format for journal entries in the books of B Limited. Okay, 1 or 1.5 page format. Make it fast. Come on. Yes, so all of you should have made the formats of journal entries in the books of B Limited, that is transferee company. Now, which method of accounting are we going to follow? As it is amalgamation in the nature of purchase, we are going to follow purchase method of accounting. Okay. So first entry in the books of transferee company, write down business comes in, debit what comes in, business purchase account debit, and the amount is payable. Okay, payable to the liquidator of transferor company. Credit the payable. So to liquidator of transferor company, that is A Limited account, with the amount of purchase consideration. So what is the amount of purchase consideration? As we have calculated the amount of purchase consideration, 5,60,000. Being business of A Limited purchased. Now, second entry in the books of transferee company, but by which method? Purchase method of accounting. Assets account debit, excluding fictitious assets, add agreed values. To liabilities account, excluding reserves and surplus, except statutory reserve at agreed values, and to business purchase account. And then we studied, every time I show you this, but you have to remember it in exams, that we have to find difference between purchase consideration and net assets. And if we are paying more goodwill, if we are paying less, it's a capital profit, so transfer to capital reserve. So let's make that working note number 4 in this question and find out whether do we have goodwill or capital reserve. First we find net assets. So agreed value of assets taken over. Okay, agreed value of assets taken over. Now agreed value of assets taken over means, all of you see on the asset side, land and building, no different value is given in adjustment. So 1,70,000 itself. Okay, land and building 1,70,000. Then next asset, all of you can see after land and building, machinery 4 lakhs. Again, no different value is given, means we'll take book value itself. And we had studied in the notes also in net asset method that if for tangible assets no information is given, means we would take it at book value itself. So machinery 4 lakhs. Okay. Then which is the next asset after machinery? After machinery, investments. But investments will be included? No. Why? Because investments are not taken over. And we have to take agreed value of assets. Which assets? Taken over. So investments will not be included in this workings. Okay? Investments are not taken over. They are sold by old company A Limited itself for 45,000. In the books of A Limited for selling the investments, we have passed the entry also with 45,000, as you can see here. So investments will not be included in this workings. Stock and trade, no different value is given. So 80,700 itself, that is book value. Stock 80,700. Then after stock we have debtors. Again for debtors also no different value is given. So debtors 1,40,500. Okay. Debtors 1,40,500. Then after debtors, cash and bank always at book value 16,500. Okay, cash and bank 16,500. So total agreed value of assets taken over, if we add this, then 1,70,000 plus 4 lakhs plus 80,700 plus 1,40,500 plus 16,500. 8,07,700. From that we will subtract agreed value of liabilities taken over. So less agreed values of liabilities taken over. Now there are two liabilities and both are taken at book values only. See on the liabilities side, which are the two liabilities? 10% debentures, 2,50,000. No, 10% debentures are taken at discount of 5%. So we have done the workings. 10% debentures agreed value is 2,37,500. Okay, 10% debentures 2,37,500. And debentures are taken at book value itself. So sorry, creditors are taken at book value itself. So what are creditors in balance sheet? 1,28,700. Okay, creditors 1,28,700. So agreed value of liabilities taken over is how much? 2, 3, 30, 50, 58, 65, 3 lakh 65,000, 66,200. Okay, 2,37,500 plus 1,28,700, that is 3,66,200. If you subtract from 8,07,700, then we get 4,41,500. This is net assets. Now net assets we have to compare with yes, purchase consideration. So how much purchase consideration did we already obtain? Check it in working note 2. We obtained purchase consideration 5,60,000. So are we paying more or less? We are paying more. How much more are we paying? If you find the difference between the two, 1,18,500 we are paying more. That is the value of goodwill. Okay, so in second entry, goodwill account will be debited with 1,18,500. Now directly from this workings will get the entry. Land and building account debit 1,70,000. Okay, assets account debit excluding fictitious assets at agreed values. Remember the concept of entries properly from the summary. Advisably, before every question, every video lecture, you must revise the entire summary again. After land and building, machinery account debit 4 lakhs. Machinery account debit 4 lakhs. Okay, every day keep a practice of revising. Stock account debit 80,700. Revise with amalgamation in the nature of mergers conditions. Revise with the methods of purchase consideration. Revise with pooling of interest method, purchase method of accounting, accounting in the books of transferor companies, everything every day. Debtors account debit 1,40,500. Then further if you see in the workings, cash and bank account debit 16,500. Then without fail, goodwill account debit. Okay, goodwill account bracket working note 4. The amount what we have obtained for goodwill is how much? 1,18,500. Without fail, don't forget to include that in this entry. Then two liabilities accounts, so 10% debentures, 2,37,500. Then after 10% debentures to creditors account 1,28,700. Okay, assets account debit to liabilities to business purchase. So to business purchase account with the purchase consideration, same amount what we debited earlier, 5,60,000 is what we have to credit. And I've told you earlier also, after you pass second entry being a very big entry, cross verify debit is equal to credit or not. So debit 1,70,000 plus 4 lakhs plus 80,700 plus 1,40,500 plus 16,500 plus 1,18,500. You can see debit is equal to 926,200. Now cross verify with the credit amounts. What are credit amounts? 2,37,500 plus 1,28,700 plus 5,60,000. So does it come to 9,26,200 or not? Yes. Means this entry is correct. Okay. So every time after you pass the second entry in calculator, verify is the debit total equal to credit or not. Being assets and liabilities of A Limited taken over. Okay, being assets and liabilities of A Limited taken over. Next, entry number 3, settlement of purchase consideration. So liquidator of A Limited is the receiver, debit the receiver, liquidator of A Limited account debit. Now liquidator of A Limited account debit with full amount of purchase consideration, that is 5,60,000. Now what have we given to that? Look at working note number 2. We have given 80,000 equity shares and 5 rupees is the face value. So to equity share capital account, to equity share capital account with what amount? 80,000 equity shares multiplied by 5 rupees of face value, 4 lakh. But the shares were given at 6 rupees. Okay, 5 rupees shares were given at 6 rupees. 1 rupee was premium that we have written in this adjustments also, that 5 rupees shares value is 6 means there is premium of 1 rupee. So same 80,000 shares to security premium account with 80,000 shares into 1 rupee, that is 80,000. And what else have we paid? Look at the working note too. Cash. How much cash is paid? 80,000. So cash goes out. Credit what goes out? To cash and bank account 80,000. Okay, to cash and bank account 80,000. Being purchase consideration settled. Okay, being purchase consideration settled. First three entries we discussed will be there in all the questions. Okay, entries 4 to 7, rather here 8, including that amalgamation adjustment, statutory reserve. Only if specific information is given in the question. Fourth entry is for issue of shares in the public. Do we have any issued shares in the public? No. No shares are issued by B Limited in the public. Don't get confused with this sixth adjustment. They are not shares issued in the public. Okay, transferor company itself is selling the 1/4 shares received from B Limited. B Limited is not issuing any shares in the public. After that we have liquidation expenses. Do we have in this question? Yes. Look at adjustment number 5. B Limited. Pay the cost of absorption 2,500 by B Limited. So B Limited will pass the entry. Now because it is amalgamation in the nature of purchase, by purchase method of accounting, goodwill account debit. Okay, for amalgamation expenses or liquidation expenses of this 2,500, because in the second entry we have goodwill, so we'll say goodwill account debit. If it was capital reserve, then capital reserve account debit. Cash goes out, credit what goes out to cash and bank account 2,500. Being cost of absorption paid, as given in the question, being cost of absorption paid. Now fifth entry after liquidation expenses. Okay, shares in public we don't have, that was actually the fourth entry. Fifth is this. Sixth entry establishment expenses, registration expenses. Do we have in the question? No. No preliminary registration incorporation expenses are given. Seventh entry, the last entry, settlement of liabilities. Here you can see that 10% debentures are issued, 12% debentures. We have done it here in working note 1 also. 10% debentures are going to be given, 2375 debentures of value 237,500. So this 10% debentures account 2,37,500 we will reverse and debit and close. Okay, 10% debentures account debit 2,37,500, and against that we have given 12% debentures, so to 12% debentures account with same value 2375 debentures are given, so 2,37,500 being 12% debentures issued against 10% debentures. Okay, being 12% debentures issued against 10% debentures. Now after that Theoretically, we studied one more entry, amalgamation adjustment account debit to statutory reserves. But do we have any statutory reserve in this question? I've told you earlier, in further past questions, we have come across with statutory reserve, export profit reserve. That we don't have here. Otherwise, I told you development rebate reserve, investment allowance reserve, these are statutory reserves. But none of these reserves we have in this question. So that last entry, 8th entry won't come here. Now we have to do the total of journal. Okay, the formality of total of journal. So all of you can see 5,60,000 plus 170 plus 4 lakhs plus 80,700 plus 1,40,500 plus 16,500 plus 1,18,500 plus again 5,60,000 plus 2,500 plus 2,37,500. Total of journal 22,86,200. Okay, 22,86,200. So all of you must be completely clear with this question. Okay. Now next question which you are going to try on your own, question number 10. It is exactly similar. So read that question, see the workings of this question, refer to this properly and try it completely on your own. Right? Next question I will see in the next lecture. Bye everyone. Take care. See you in the next lecture.